This is how I made 150% with stocks in less than 3 years. I will show you which stocks made me the most money. I will show you how I found these stocks and if they're still a great buy, how I decided to invest in them, and when I decided to sell them. So in just the last year, I made 80% on my investments. Try and find me another YouTuber or person that made 80% in a year, because I would also want to know what they're doing. But as you can see, I didn't get lucky on just a couple of stocks. If you see my portfolio, I own a ton of stocks, and growing 80% when you're spread out like this is pretty insane. There is of course a chance that you have a lucky year and made a ton of money on certain stocks, and that is also the reason why I put in the title that I made 150% over 3 years. So in this graph over here, you can see that I started in 2022, so almost 3 years, and for my first year I didn't even take investing that serious. I started with $2,000 in some random stocks, and a couple months later I lost $1,000. And at the beginning of my second year, I really started to change how I was doing things, because I had to decide, either I fail at investing or I do my very best and destroy 80% of Wall Street. And yeah, that's basically what happened. So the real question is, which stocks do I own and how do you find these stocks? Well, first of all, you got to understand how to value companies. So you got earnings per share, PE ratios, revenue growth rates, and how risky the company is. And then you have to know the average PE ratio of the S&P 500. And that is 19, as you can see. But at this moment, the PE ratio of the S&P 500 is at 29. Is that reasonable? If all the companies have a higher growth rate and a higher EPS thanks to the AI revolution, then yes, that's totally okay. Because if a company has a PE ratio of 20, which we just saw on the chart is the average, you usually get a growth rate between 5 and 7%. So if the company that you want to invest in has a growth rate of 20%, it will deserve at least a double PE ratio of 40. And with these calculations, you can decide whether you want to invest in a company or not. The second thing that I understood is that AI is going to be incredibly important for growth rates, but also to expand your margins, because you're running on lower costs. And that is why I searched for sectors in the economy that will be impacted by AI. One of these sectors is pharmaceutical. I did some great research in pharmaceutical companies. I do that with obviously AI and deep search. That is helping me a ton. And you can use MSN from Microsoft to see everything about the company that you got to know. And with these two tools, I'm judging whether I'm buying the company or not. So you might be curious now on what I actually own. You can see here the asset allocation on how much money I have in every single company. And all the stuff is great, but I understand you want to know which stocks are still a great buy. I will quickly name 10 stocks that are still a great buy, but you obviously got to understand what are these stocks. You got to run projections on these stocks yourself. If you don't want to do this yourself, subscribe to the channel. This is my first video. In my upcoming videos, I will briefly explain what every company does, how much growth potential they have this year and the upcoming 3 years. And I'm going to show you the best and most risky stocks that could potentially 10x or 100x your money. So if you look at my portfolio, the stocks that are still a great buy are Marvell, AMD, Fubo, Honest Company, APLD, XQO, UEC, Ctime, Micron, Nike, Confluent, and Intilla. It's obviously nice to know which stocks are a great buy, but what strategy did I use to get to this point? This will be for everyone different, but I started with depositing around $100 to $200 a month, so it's really nothing crazy. And you can see it's a slow curve, but obviously it will grow exponentially. The more money you got in there, the more you will make from it. And I made sure I always had 10% in cash. So if your portfolio is 20k, you got to make sure you have at least 2k in the bank ready to deposit when there is a black swan event. And we're getting these black swan events very often. So that's absolutely great. Just like in April with the Trump tariffs, I actually had like 3 to maybe even 4k ready to deposit. And that is what I slowly did. You can see that the gray line is how much money you're investing. And this was around February, March, and April. And you can see that that gray line is skyrocketing. I'm investing a ton of money because if the VIX, the volatility index, is above 40, it's always a great buy in history. There is only one exception, and that was the financial crisis, where it wasn't that smart to invest your money because you had 17 months of downwards momentum, and it took 5 years and 5 months to get back to its all-time high. But apart from that, every single time the VIX hit above 40, you had some great profits the year later. And you can see over here, I actually went down on my investments because I had no cash ready. I already made my money. I was positive again, and I had to make sure I had some cash laying around. So I took away $1,000 and I didn't invest anything. So I'm already getting close to the 10% cash mark, and that is what you got to do. Invest heavily into downturns and then take away some profits once the markets are going bullish again and recreate your cash pile. It sounds simple, but it's harder than you think. Once everything is going up, you get so bullish, and that will make you want to invest more money, take out loans, do all that stuff. And then the last thing that you will want is selling stocks. But don't do that. Make sure to take some profits and welcome the next black swan event.